So this video is in a response to one of our members who wrote in and said to me, Sean, how do I backtest a pairs trading strategy on the platform? And it's definitely the right question to ask. And I wanted to do a video on it because there's a lot of benefit that you can gain from understanding underlying what is happening here. And I thought for anyone watching this on YouTube, they'll get a ton of useful tips and information. I think this is a really good type of strategy. That's not a recommendation. I can't give you advice, and nor am I qualified to give you advice. But in my experience, this is where I spend my time, right? These are the type of methods that when I'm researching different strategies and techniques, these are the things I'm looking at. And there's a reason for that, and you're going to see it, in this video as we go through. So if you're looking for, a one-click just backtest and show me, how I would have performed trading this, then that upgrade is actually coming to the platform probably the end of this month, if not sooner. So if you just want the solution there where you can click a button, it'll do it for you, and it's all automatic, and you don't have to think about what's going on, then you don't need to watch this video, right? Because I'm going to go into detail. I'm even going to open Excel. I'm going to do some calculations in Excel. I'm going to upload that back into the platform. We're going to run it through some backtesting stuff. We're going to go through all of that in this video. So if you feel like it's probably not worth your time, you're not super interested, go and save some time. You don't need to watch all this. When the upgrades come to the platform, which I'm, working profusely on at the moment, I'm very excited about them. You will be able to just do this all automatically. But for my friend who's, for example, looking at this and please help me, literally, please help. I need to understand how to do this. This video is really for you and anybody who wants to understand underlying what is happening with Z-score, what is happening with pairs trading. This is an area I like to spend time on. So I'm going to take my time in this video. I'm not going to rush it to keep the video short. I'm really going to take you through paint by numbers, how I see this playing out, how to approach this. So enough talking about it, let's do it. The first thing here we have is a chart of Sol USDT to Chess USDT. And if you go to the Z-score list, there'll be loads of potential opportunities for pairs trades, especially if the market's moving a lot. In fact, right now, it's not moving a lot. This is very few. Anything over 2.5 or negative 2.5 will, highlight in green or red, respectively. You don't need to use that Z-score list. You can take a note of Sol USDT to Chess USDT if you want to. It's absolutely fine, however you want to do it. I'm looking at hourly data. I found that hourly data works really well for crypto co-integration, which I think is ironic because my understanding actually is that daily data and co-integration and pairs trading is actually better over long-term trades. So this is very interesting because what I've experienced backtesting in crypto is actually completely the opposite to that, which you may or may not find interesting. I found that interesting. So what am I looking at here? There's a chart here of Sol USDT. This is the close price of Sol USDT. So you can see this green line here. And here's the close price of Chess USDT here in blue. And this to me looks like a really interesting chart because, with co-integration, really what broadly you're talking about is the crossing of these prices. How often do they cross each other? And this crossing is called the spread, right? The spread is really looking at what is the difference? What is the difference between the two prices? It's actually price A minus price B times the hedge ratio. And the hedge ratio is basically up here. So for example, this hedge ratio is 100.21. Basically what that means is, you need to buy 100 of one coin on average to, match the other. It's not exactly like that. In fact, I think any quants watching this probably want to vomit at the explanation I've just given you. And actually, for you guys who are watching this who are far more advanced than me when it comes to, the math side and the calculation side, put in the comments, help the other guys out better than I can at that point. But broadly speaking, this is the hedge ratio you can use. I'm actually going to calculate a broad brush hedge ratio, which is kind of completely wrong, but I'm going to calculate it for you in Excel. otherwise, this hedge ratio that's on the platform is calculated, using quant methods and libraries in Python. So, in my opinion, it's the best hedge ratio you could use. But, even the topic of hedge ratio is very broad. Let's not get bogged down in hedge ratio, okay? Because the one thing I want to say here as well is don't let great get in the way of good. Don't let things like having to know the hedge ratio inside out stop you from actually trying and testing stuff. In my experience, the best way to learn things is actually trial and error. That's what works for me. Doesn't work for everyone, but trial and error works. It's worked for evolution and it's working for me pretty well, in terms of the research. So don't get too bogged down, but think of the hedge ratio as, for example, the hedge ratio of Bitcoin would be like 40,000. It's like $40,000 to buy a Bitcoin. It's not exactly what the hedge ratio is, but that's what gets factored into that calculation. Another way to calculate the hedge ratio, which we're going to do, or we're going to use very broad brush, is just to divide, one average of prices by another, just to get a broad brush calculation. But I wanted to show you that anyway as we get into this. So if I scroll down here, this is that spread, and so when the prices are very near each other, you can see the spread is very low. It's back at 0. When the prices are very wide, the spread is wide. It widens here. Now again, the spread is calculating using the hedge ratio to calculate, so it's not exact. It's not just that price minus that price at that point in time, but it gives you an idea of what's happening. And so really what you're looking to do here with the spread or with pairs trading is you're not looking to trade the coin, okay? You're actually trading the spread. So you're shorting one coin and going long on the other, or you're shorting one stock and you're going long on the other, or you're going long on one and shorting the other, depending on, where the gap is. So if the spread is negative, you'll short one and long the other. If it's positive, you'll long one and short the other, depending on what you're trading. So what we're really trading is the spread. So when this, if we go and short this pair here and go back long here, we've made money, right? So we're trading the spread, which is much more mean reverting. So it's always kind of reverting back to this mean. And I say always. By the way, I'm not qualified to give you advice on trading, so I can't tell you that you'll do this and it'll all work. But look at this chart, right? It's very predictable, right? It's much more predictable here in terms of, you can see there's a statistical method. This is statistically predictable. I'm going to use that term very loosely. It's co-integrated. So over the last 2 weeks, this pair has been co-integrated. Right, so this for me presents an opportunity for backtesting that is really worth exploring, and that's what we're going to do here. We're actually going to go and backtest this and say, okay, how would I perform if I traded the spread, and how would I trade it? And there's so many ways you can trade it. In fact, you can even put Bollinger Bands on the spread. There's so many things you can do, and in fact, where's the book? Do I have the book here? I'm not sure where the book is, but if you go to the Hudson and Thames website, they've got recommended reading. Read all of their material. Again, that's my cousin's platform. In fact, we will be doing an interview. I know I keep promising that. We will be doing an interview because, that business, Hudson and Thames, and they have videos on YouTube which go into all of this very technically. They even go into the maths. It will explain all of that to you. But if you're like me and you just need to understand, kind of what's going on, then let's continue from here. So that's really what we're trading, is the mean reversion of the z-score of the spread. So that brings me to this third chart. This is the z-score, right, of the spread. So this is saying, for example, what has happened with the spread. You can see that it jumped up very quickly here, boom to boom, jumped up really quickly. And you can see, there's this big spike up in z-score when this jump started happening. And so the z-score is basically taking what is the current spread minus the average, right, divided by the standard deviation. And so really, you're not even trading the spread as such. Well, you're trading the spread, but you're using the z-score as the indicator for trading the spread. So it's like what you would do here is you would buy the spread here, short it here, right? Short the spread here, go long here. buy the spread here, go short here, depending on what your strategy is, just depending on what your strategy is. And so I'm going to show you now how to back test all of this. So what you can do here, and I'm just going to leave this tab open for reference so it's quick to get back to. I've got another tab open here for the data builder. So you can just go to data builder here. Here's data builder. We're going to get some crypto data. And the two cryptos we're going to get over here is going to be, Sol USDT and Chess USDT. So the first one I'm going to do here is going to be Sol USDT. There it is. And I'm going to go as far back, because this is hourly data. I don't need to go very far back. I'm going to go as far back to October. So we're talking like 4 or 5 months of hourly data. That's quite a lot of data. So that's going to be 1 hour of data. And I'm going to call this, this file Sol. So let's just get that data. And so what I need to do, actually I'll explain this in a moment. Let me just refresh and do this again, because now we need another data set. So here I'm going to get Chess USDT. So here I'm just going to type in Chess USDT. And again, I'm going to go back as far as October. Now this is coming directly from the Binance exchange. And I'm looking to, in fact, I've added in the new upgrades to CryptoWizards Poloniex. I'm looking to add Kraken, etc. as well. But anyway, that's just a side note. So here, hourly data again, but now this is for Chess and it's for the same time period. So let's get that data set. So it doesn't actually take that long to download the data, funny enough. I mean, it's done. So now I'm going to go to the data engineer, which is here, but I can also click on this icon here to get there. And here's my 2 files. So what I want to do is I want to join these 2 files into one file. So what I'm looking to end up with is I'm looking to end up with a file that has the close price of, say, Chess or Sol and the close price of Chess or Sol, close price of each asset to do these calculations. And I'm going to show you the calculations in Excel. We're going to re-upload that into here and back test it. Again, when the upgrades come for the new platform upgrades, you won't need to download files to calculate the stuff. It'll just do it for you. But you might want to, right? I'm not encouraging people not to use Excel. I use Excel all the time. I cut my teeth on Excel. Like it's brilliant. So what I'm going to do is I'm going to refresh this file here and just show you what the data looks like, right? So I've got open, high, low, close. This is using like pandas really. So it gives you the top 5 results and the bottom 5 results of the data set that you can download, which we're going to do. But this just, shows you what does the data look like. So I've got all this information all the way back to October, for these cryptos. And I want just the close price. But the first thing I want to do is join the 2 data sets together, because right now this data set and this data set are separate. So what I'm going to do here is go to join data and I'm going to select a file. So right now I think I'm in the Chess data set. So I'm going to select the Sol file. And I'm going to add that file, in here as a comparison. So here I've got my current file, which is Chess, and I'm going to select the date time, and I'm going to join it to the date time of Sol. So what does this mean, this join? This is really important for those of you who understand, programming concepts or SQL or, data tables. You'll look at this and be like, please, Sean, like, hurry up. I know what join means, but some of you don't. And so it's important that we cover this. So when you're joining 2 data tables, you need a unique reference for them to both relate to, right? So if you're going to join 2 things together, what are you going to join it on? And so you have to say, right, where the date time in this new table matches the date time in this table, add all the close prices, etc., in and combine the 2 together. You're going to see it happen. So if that didn't make sense, don't worry, you're going to see it now. And I'm just going to call this file join. So I'm going to join these 2 data sets here. Okay, so that seems to have worked pretty successfully. So I'm actually going to just refresh the page. And you can see here I've got this join file. So if I click on this join file now, and I show you what that looks like, you're going to now see that you've got not just the prices we had before, but you can scroll along, you'll see that you've got the same thing again, but it's for the other crypto. So this F1 is essentially Chess, because that's the current file we used. And so this is feature 1 for 1 representing, table 1, which was Chess. And then here you've got feature 2, which is 2 representing table 2 for Sol. And so this has joined, both those prices together, which is great. Now, you know, I could do the rest in Excel, but I'm actually just going to do it here very quickly. So I'm going to go and delete. Basically, I'm going to go and delete everything except for the close price. I'm going to keep the date time and the close price of, you know, those two assets. So let me just select those. So I've got close here and date time. And so I'm going to just delete everything else because I don't need it. Like for this strategy, I don't want all of that noise, right? If I refresh this now, you'll see that there's now only 3 columns of data. If I go to my data, you'll see there's only 3 columns: the date, you know, and the time, and the price of chess and the price of Sol. So that's all I need. So this is great. Now what we can do is to download this. I'm going to click on this download icon here. And you can see here's my CSV file for join. I'm going to show in Finder and I'm going to open this file. Now let's actually label these columns slightly differently. I'm going to call this chess and I'm going to call this close. So chess close, and then I'm going to, you know, relabel this one as well, and we're going to call this Sol close. I could have done that in the platform, but I'm just going to do it here because I forgot to do it. So the first thing I actually want to do, and I'm just going to do it up here, is calculate the hedge ratio. So what you could do, right, is you could go to Crypto Wizards because it actually calculates it for you. We've got 100.21 over here. And you could just go and punch in Excel, you know, 100.21. Sorry, 100.21. So you could just go and do that really easily. That's one way to calculate the hedge ratio. But in reality, I've run this data set for a different time period. So I don't actually want to do that here. What I'm going to do very broadly, and again, you know, I'm sure there's a lot of people who would be very upset by this, but I'm going to take the average here, or maybe not so much upset, but you know, I'm happy to take the criticism, by the way, as well. Please do correct me for other people's sake. But I'm going to take the average of the close here for Sol, and I'm going to divide it by, you know, the average for the average of the close price here for, let's just see here, the average of the chess close price here. So that gives me a hedge ratio of 83.13, right? It looks broadly the same as that 100 hedge ratio we had earlier. The prices might have changed a lot as well because different time periods. Also the hedge ratio calculation here is completely different and probably not that reliable, but that's fine. It gives us enough to work with for now. So what I'm going to do now that I have a hedge ratio to work with is I'm going to calculate the spread. So if we go back over here, right, we have this spread here. Here's my spread. I want to calculate that, and I want to do it in Excel. So I'm going to call this spread. And the way I'm going to do it is I'm going to do it based on essentially this price here. So the Sol close minus the chess close times the hedge ratio. And I'll do this in brackets so you understand what's going on. And in fact, let me zoom in here, see if I can zoom in a bit just so it's easier to see what's actually going on here. So let's take the spread here. I'm going to say, you know, that Sol close minus the chess close could be the spread, right? You could look at the spread like this, but you don't want to calculate the spread like this. You want to take this chess close and multiply it by the hedge ratio to get a spread you can basically use. So what I'm going to do is take this and put it in brackets just so you can see what's going on, multiply it by the hedge ratio, and I'm fixing this in Excel because we're going to drag that down and double click on this fill handle, and there we go. Now I've got a spread to work with, and you can see the spread is both, you know, it's got negative numbers and it's got positive numbers going on here as well. So now what we need is a z-score. What I need to do is actually use the spread because we're doing it on the spread. And so I'm going to say, you know, and I'm going to take brackets for this. I'm going to say, what is the spread, the current value minus the average for the last 20 days, right? So this is giving me 20 days worth of data for the spread, right? So what is the current value minus the average? Well, it's like, well, the average of what? So you have to choose a time period. Do you want to trade this with a window of 20 periods like I'm doing here? Do you want to do it at 40? Do you want to do it at 50? Do you want to do it at 2? So when you're backtesting things, you know, you can explore this to your heart's content, right? These are the parameters you can change and tweak, etc. And these are the type of things I'm building into the platform, so you can just basically click a button, select some things you want, and it'll do it for you. But for now, this is good enough. So that's the average, and I want to close that bracket. So I'm taking this current value minus the average, and I'm going to divide it now by the standard deviation of that. So standard deviation of this same rolling period here. And I'm not going to fix any rows, but that gives me, that current z-score. And if I double click on this, this gives me the z-score here. And you can see there's negative values, there's positive values. If I was to plot the z-score on a chart, you don't need to do this, but I'm going to just do it to show you. Here's the z-score, right? So much more stationary, much more predictable. This is essentially going to be our indicator. So here is the z-score. So when you think of the z-score, what you're doing is you're saying, right, let's take this price minus the average divided by the standard deviation. So what that's saying is what is the change of the current price to its average divided, and how many times does its standard deviation go into that? So if the standard deviation goes into that a lot of times, what that means is this particular move must have been very big in either direction, positive or negative, right? So this can be the trigger, this can be the buy signal, the sell signal, right? So the standard deviation, what is standard deviation? Well, standard deviation is basically saying, how does this price deviate from itself, and to what degree? It's basically the bell curve. Again, I've done a terrible job of explaining that, but that's okay. Let's move on. So here we've got the z-score, and we're now going to feed this back into Crypto Wizards to trade, and we're going to backtest it. So now that, hopefully by now, even if you didn't follow everything, some of you would have more than followed this, and probably we're hoping for more detail, and others are like, okay, is this too much for me? It's fine. Let's move and backtest this, from here. But if you've got this far, you already are like leagues ahead of a lot of new entrants into trading, or people that are doing courses on trading, etc., who are not taught this stuff, right? They are given moving average crossovers, or double tops and double bottoms and diplodocuses or whatever. They're all being trained on the same stuff. Like, just because this is slightly more technical doesn't mean it's not worth doing. If anything, what's harder is usually worth doing, because it means fewer people are doing it. So if you've got this far, just well done. Well done for following along and putting up with me this long. So here we go. Let's take this now, and I'm going to create a new file, and I'm just going to copy all of this. In fact, I'm going to Control-Shift down, copy all of this data, and I'm going to put it into the new file here, which we've called book 2, and I'm going to paste special. In fact, I'm just going to paste this all in, and then I'm going to paste special values, right? So basically what I've got now is just everything hard-coded, and I'm going to get rid of all these gaps, right, where I needed previous days, because that's not going to help my backtesting algorithm. I'm going to delete all of that, and I'm going to go and save this file. So I'm going to go and save this as in my downloads, and it's not going to be called join. I'm going to actually save this as, let's call it z-score. Z-score, I could call it, chess soul z-score, something useful if I've got multiple files, but for now I'm just going to call this z-score. So it's like, okay, Sean, great. Well, this is all in Excel. I don't, how do I go and backtest this? Well, it's really straightforward. Just go here to your data builder again, but go to choose file, and here's the z-score. So, oh wait, this needs to be a CSV file. Sorry, my bad. So make sure when you're saving the file, you're saving it as a CSV file. Okay, so this is what I've now done here. I've changed this down here to CSV, and I've hit save, right? So now I've got the CSV file, and if I go to choose a data file, here's my CSV, zscore.csv, and if I hit upload, there you go, success, your file has been uploaded. Let's go to data engineer and just, show you that for a second so you can see it looks how you would expect. You've got your date time, you've got your chess, your sol, your spread, your z-score, etc., etc., etc. So it looks really good. So we now have a file that has the indicator for backtesting on it. So we've gone, we've created our own data set, we've added this z-score manually, and again, with the upgrades coming this month, this will all be automatic. But it's very good that you've had the chance to understand this. And actually, it's good for you to do this yourself so you understand what's going on. So now we've got the Z-score, and I'm going to use this as the signal for buying and selling. And we're just going to choose a very basic strategy, actually. I'm going to go here to Backtrader, which is just built for very quick testing on, backtest stuff. And so I'm just going to go here to Z-score because that's the file I want to work with. And so it's fetching that file data, and here we go. So this section here, I've really spent no time talking about, this tool. And for those who are watching, a lot of people are asking me, hey, Sean, thanks for the triangular arbitrage. We've had really, really good feedback on that course. I was so relieved and pleased because honestly, I had no idea how that course would come across, and it turns out it was very well received. And so people have said, can we get a course on the platform because there's really no videos explaining how to use this stuff? Absolutely. So I'm going to pull all of that together, to walk you through all of this. But just here, let's give you the crash course. So here on the Backtrader, what you're doing in this section is you are defining what do I want to trigger going long? What do I want to trigger going short? When do I want to close my long positions? And when do I want to close my short positions? And you'll notice there's lots of different varieties of ways of doing that. You can do it on general comparisons, meaning I want to, go long when the MACD is higher than the MACD yesterday and the RSI did X, Y, Z. That's called a general comparison because you're comparing one feature or one column to another column or one feature to another feature, right? The value comparison is saying compare a feature to an actual value that I specify. And when you look at the Z-score, I want to trade it based on the value. I don't want to compare Z-score to the close price. I want to compare it to an actual number. And so that's what I'm doing here, right? So when the Z-score is at, say, -4, I want to go long, for example. And so that's what I'm going to do here. And this is where you can really play with it. Now, I want to go long, for example, when the Z-score, and then here it says choose a look back period. What does that mean? Well, if we look at our Excel, probably this is the easiest way to explain it. In the trading algorithm, right, it's going to get to say this day here. So this trading day, right, this one highlighted in yellow. And again, let's zoom in for that. So it's going to get into this trading day here. And it's going to say, okay, I'm at this trading day. Do I want to trade based on this day? Or do I want to trade based on a value from a previous day? It could be any one of these previous days. Let's say it wants to trade based on a value from this day up here. Well, that's going to be, a look back of 12. In fact, 11, because here's 0, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, right? If I want to trade it based on the current value, I'm going to use a look back of 0. So that's all look back means, is it? And this is the cool thing built into the, into this platform that I personally enjoy a lot, is you're not limited to just trading based on a signal from today. You can trade based on what was the signal a week ago. So let's go long today and see how that, you can really just mold this into any idea you have. Most often you're going to use a look back of 0, which means what is the current Z-score. If I wanted to trade it based on what was yesterday's Z-score, I'd use a look back of 1. Or 2 days ago, I'd use a look back of 2. So here I'm just going to use a look back of 0. And so here I'm going to say if the Z-score is less than or equal to, let's say a Z-score of -1.5. So in other words, if the Z-score is down here at like 1.5, I'm going to go long. Cool. Let's do that. We're going to go long on the Z-score there. And then in terms of closing, so actually I need to add that in, so I'm just going to hit this add. And you can add up to 5 long positions. You can add another 5 short positions. You can add 5 criteria to close a long or 5 to close short. You don't have to add 5. I literally use this like I add 1 or 2, but you could add 5 of each of these 4 categories. So you could say, I want to go long when the MACD does this, the RSI does that, and the Z-score does this. You can use all of that. And all that would mean is you would just, add another value, hit this add button, and that now has 2 values. And what that means is it's not or, these are ands. It means that condition and this condition needs to be met, right? That's what it's saying. This is nonsensical to have 2 right now, so I'm just going to get rid of that. But that explains to you what's going on. And if you want to close your positions, those are all ands again, right? So you can say all of this has to happen for me to open or close a position, open a long, close a short, open a long, close a long, open a short, close a short, whatever it is. So basically what I'm saying is, I think this tool is over-engineered. I thought I would use all of that. I actually don't. Like, what I'm doing is I'm coming up with what are very specific signals I can calculate, and then just to keep things simple, doing that. But if you want to trade based on different indicators, doing different things, etc., you can do that, okay? So what I'm going to do now, I've got what's going to go long on the position here. I could add a close, close my long if something happens, but I'm not going to do that. What I'm going to do here that I like to do, because I don't know why this is, but I find this time and time and time again. With pairs trading in crypto on hourly data, something that I'm finding happens a lot is if you just go long on a position and close it in the next period, it's profitable. That's it. Really simple. Like, I don't know why. I know people have tried replicating results I've had when I was doing this on Python and said couldn't replicate it. But I find this. So, please try to replicate this yourself as well. See if you get similar results. Play around with it. And, not for me, because I struggle to keep on top of comments and emails and things. And truthfully speaking, a lot of that is because I'm finding out that I, very, very highly likely have autism. And I just never knew that. Probably a lot of people watching this right now are like, yeah, we knew that. How could you not have known that? It's kind of obvious. But, so I'm not always on top of those. But what I would encourage people to do is, post comments if you know stuff or you find stuff out, post it either in the comments on YouTube, or one of the things I've also been asked to create is a Discord. I haven't done that because, I'm not sure I can commit to being in it a lot with my time right now. I've got so many things I want to get out that people are asking me for, and I feel like I can't get them out quick enough because I love it. Like, this for me is cathartic. Like, I love working on this. I find it actually calms me down. It helps me relax. Ironically, this is stuff I really enjoy doing. But if I did create a Discord in the members, for the members of Crypto Wizards, let me know, because I know some of you are very pro that idea. Do you think it would be, self-regulating? Is it worth doing? I think it's worth doing, but I'm curious to know your ideas of how that should happen. Anyway, I've digressed too much. Let's get back to what we were doing here. So instead of closing a long position this way, what I'm going to do is close it based on other criteria, and this is a catch-all. This down here says close everything if one of these 3 criteria are met. Either I have a gain or a loss of X%, or just close it in the whatever period. So I'm just going to say close in N periods, close in the next period. If I wanted to close it a week from now, automatically I'd put close in 7 periods from now. Or 7 hours, sorry, not a week. This is hourly data, so it'd be 7 hours from now. So here I'm going to say just close it in the next 1 hour. And that's it. And to see that up here, you can see special close rules. If a long and or short positions will close, so long and or short positions will close in 1 time step. That's the one we added here. Okay. So what we're going to do now is actually go and backtest this. So the price feature, what do I want to trade off of? Yeah, and so if you've been following, you might have the answer for this, but do you want to trade based on the chest close price, the sol close price, or the spread? Because remember, the Z-score is the indicator. That's what's triggering us to trade. That's the buy or sell or close signal, right? The price feature is what am I buying? So if I was trading Bitcoin, I would pick the close price of Bitcoin or the open price of Bitcoin or whatever. What am I buying? Here, I'm just going to use spread, right? Now, theoretically, if this was better, it would short one price, long other price, right? And you would select those shorts and longs in. But essentially, that's still the spread, right? So all I'm going to do here is trade the spread to give me an idea. the amount of capital I'm going to allocate is 100%. I'm going to do this. So always, before you go and trade, any strategy you've backtested, always include commission and cost assumptions, slippage assumptions in your trade, because this is actually what kills traders. The cost of trading kills traders. Like, let me put it this way. If Binance, or a lot of you guys are from the US, if Kraken offered you, 0.001 market maker rebate to every trade you do. And actually, when we were working with Crix, what I loved about them is they were looking to offer, market making rebates on trades. And it was genius. And the more I think about it now, I'm like, I really didn't even give that as much, positive speak as I feel I should have now. Like, so I want to do that now. I want to tell you, like, if you can find an exchange that gives rebates for trading, take it. Because if this was the other way around, if you weren't paying commission or slippage and you were getting it back, you are making money. You don't even need a strategy. You can just buy and sell and you're just going to make money. But the opposite happens, right? The opposite happens in trading. So no matter what happens here, you're going to lose your bankroll unless your strategy overpowers the cost of trading. So it's very important. But, so I've said all of that, but now I'm going to caveat that. When I'm trying to find, does a strategy work in theory, like I'm doing now, I don't want the cost of trading muddying that water, right? I just want to know, is this a logical buy or sell signal? That's it. So I actually just put these to 0, right? So I just zero all of this out. If you can find a rebate, you can put that in and see what I was talking about. But I just put these to 0, just to find in purity, does this work? And then in reality, then I would put in, the costs if I wanted to know the reality. Okay, the maximum trades that can be open at any time, I'm just going to put is 1, because I'm literally going to buy and sell in the next hour. That's it. Starting capital is going to be 5,000 of whatever coin you're trading. You could put that as 1, you could put it as 10, you could put it as 100 million, it doesn't matter for this purpose. And then the minimum capital threshold. So if my capital reduces below 20%, it's going to stop trading, right? That's all that means. So that's fine. Let's go and run the backtest and see what happens. So this actually takes a while to run. There's a lot of calculation happening here. And again, this is just high-level backtesting, right? It's nothing super advanced going on, but it does take time, which is why I recommend, like, try not to have over 2,000 rows of data when you're using this. Like, if you have over 2,000, it's going to take too long, etc. First of all, we see that this has a horrifically low win rate of only 25%. By the way, win rate is what I focus on the most. How many wins did I get as a percentage of how many losses? And it hardly traded, right? There's very few trades going on here. Now, you might look at this and be very disheartened by it, but I'm not. Because when I see something like this, what I do is the following. So you'll be glad you stuck around for this. So this is going to be quite fun. So if I look back here, and by the way, I just changed this to 0 because it was showing as 5, the look back. But this I said, let's go long when it's at negative 1.5. Let's go long on the spread. Well, if I have a negative win rate, if I only have a win rate of, in other words, if I have a loss rate of 75%, watch what happens if I go and change this. Rather than buy long, let's hit sell short, right? So what that means is I'm going to, rather than go long the spread, I'm going to short the spread, and I'm going to delete the long condition we had before, and I'm going to go sell short. Watch what happens. If I go and run backtest, let's see what the result comes out like. There we go. So we had more trades, I think. We have a 74% win rate. And our return on investment was 71.2%. And the return on investment versus the buy and hold is 172%. In other words, the buy and hold would have kind of kept you neutral, right? And that makes sense because it's the spread, right? So it's the spread you're trading here. So it's looking at the buy and hold of the spread. But the reality here, though, is, we would have we would have had a good win rate. I'm not actually looking at the dollar numbers here again because we're trading the spread in this, but doing this method gives you an idea of the trigger. So truthfully, looking at this, when I look at the Sol and Chess, is it worth looking into trading when Z-score is negative 1.5 and shorting the spread and closing that short within 1 hour from now? Yes, because according to this, over the last 4 months, you would have had 19 trades. So 19 trades closed. 14 of those would have made money. I like options, by the way. So when I'm looking at strategies, I'm thinking about options because the size of the move then doesn't really matter. You know, well, you need to think about things like volatility, etc. But this for me is really interesting. 74% win rate. And so what I want to do now is I actually want to go and add in some commissions. So let's put in 0.001, slippage 0.001, spread 0.001. I'm just going to put in some cost assumptions. Again, these are very broad brush. Like this tool is really just built for rapid fire testing stuff. And for me, it's good enough. And so I put those costs in here as well. And also because it's the spread, actually this won't work for costs. And I've just realized why, because it's doing it based on the spread, not the percentage of 2 trades you're doing. So actually each of these trades would have been quite costly. But you know, again, in the newer upgrades, that'll calculate for you. But so this is great. And this is how you can go and, you know, work on your own hypothesis, upload the file or just do it directly with the tools in Crypto Wizards and see, you know, does it make money? Does it give me a win rate? I think the key takeaway that you should get from this is quant-based methods like statistical arbitrage, which is what Z-score is. It's like my cousin said to me once, these methods work, right? It's just about, you know, the execution then and actually how are you going to use them? But the methods actually work. And here's a really, really good example using statistical methods of, you know, and we've literally just tested this, by the way. This is 10 a.m. in my morning time. I started, you know, preparing for this video. I think it was 8:30 a.m. after my food got delivered, etc. I've not spent long on this, right? If you spend a lot of time going through stuff, you're going to find some really interesting things. So you know who you are. You asked for the video. I hope this explained things well enough for you. If it's too much and you just want something quick and easy, again, just wait till the end of this month because you'll get some really awesome stuff there. But the platform is already there. Like it's already good enough to start finding some really good opportunities. So you can also, by the way, change what you're going to trade. Maybe, for example, I just want to trade the Sol close. So if I change this to Sol close rather than the spread, and I'm going to, again, give this some purity. So I'm just going to get rid of my costs for a moment. And actually, you could add the costs in now because you're using a legitimate close price for backtesting. So theoretically, you could actually go and add the costs in now, but it's fine. We're at the end of the video now. I'll let you, go through and do all that. But this is what you can do, right? You can actually go and trade do I want to trade the spread? Or do I want to just trade, one of the close prices, for example? And it turns out here, even though you would have made money, so your winners won very well in this case, your win rate's not very good, right? So you would have made, $47 or 47 Sol or 47 pink elephants or orange monkeys. You would have had a return on investment of 1%, which beat the buy and hold. So clearly Sol lost money, but you would have beaten the market. But your win rate was only 46%. So what that shows is you would have had some really good swings that worked in your favor and you still would have made money. But I typically don't like anything with a low win rate. I like to know that the strategy logically makes sense. Anyway, too much talking. I think there's a lot there to consider. And again, hope you got a lot of value from the video. So thanks for your question. Take care and talk soon.